Okay, welcome, penny stock billionaires, to the Sunday chart chat live stream. We're going to be talking about all the charts for all the great stocks. We're looking for our next 10 bagger, next 100 bagger. We've had 9 already, and we just need one more. I was really hoping to get a 10th 10 bagger to close out 2021. But with only, just about a week left in the market, I don't think we're going to get a 10x this December. It might have to wait. It might have to wait a few months, but I think we got a couple things in the pipeline. We also have new stocks in the pipeline to be debuting in January and February. We got a couple of interesting situations, and a lot of interesting things happening in the market. So thank you all for joining. Oh, by the way, I want to try something new, which is instead of having like the chat, like on the right side, I guess on the right side of YouTube, there's the chat. If anybody actually wants to join, hop on in like video as a guest on the video. If you want to have anything if you have anything to discuss, if you have anything insight, always interested. Make sure that your webcam is working, and obviously, don't hopefully you're not naked or anything, and don't say anything dirty. So as long as your camera thing is working, just let me know if you want to do it. I will share the link in a little bit, and we'll get into it. So I'm going to post a link in just a bit. So I want to just cover a couple of things first. Okay, so the good news. Before we do anything, Bets finally is trading. Finally, on Friday, we opened up Bets after 6 months. It was halted for 6 months, for this merger. The merger didn't go through. They got something else I think they're working on now. Pretty interesting. I've actually never had a stock halted pending a merger, or for this amount of time. I have never heard of this type of situation, but here it was. And of course, it opened up, and then just kind of, the market kind of, I guess people were just angry and dumped shares. I don't blame them. I think it was just a lot of emotional, people just wanted to get the hell out of it. But bounced back actually pretty strongly. Good volume. Obviously, it's down, whatever. But I'm pretty sure. I would say I'm pretty certain that Bets is going to make a comeback, and I'm hoping to get the CEO, which is Troy now. This is the official CEO, onto our live stream. Maybe the next week. I think what they want to do is they want to come on in January, like after. I guess the theory is, which a lot of companies have this theory. I know it's a popular theory with Canadian shares. Is look, right now you got a lot of tax loss selling, so they kind of just figure, look, let the thing kind of just flush out, come back, and in January, and then we can get things moving again. But yeah, I think Bets is actually going to do very, very well. Looking forward to getting the update from the company shortly. So let's see. All right, so I think what we're going to do is let's kind of start off with some of the big themes. So right now, look, the markets are really, I don't know if anybody's noticed, but the markets have been really under pressure for the last few months. It's been kind of a pretty choppy market. I mean, if you look at the CSE chart, the CSE index, that's the Canadian, that thing has been like a ski slope. It's basically from February, it's gone like straight down. It's down like 50%. It looks ridiculous. And let me just pull up Esc Innovation. Yeah, so a lot of these stocks have been really getting whacked lately. It's been very, very uneven. So again, let's look at some of the bellwethers. ARC, the Cathie Woods stock, the ETF. I think that's a pretty good bellwether for, let's use the word disruptive innovation, microcaps, emerging growth, pretty much. And that's, affects the stuff that we're doing. I mean, obviously, the stocks that Kathy Woods holds are sort of bigger versions of the microcaps we're doing. But again, it's all essentially disruptive innovation. Just she's playing in the 200 $1,000 level. We're playing in the 25-cent level. Otherwise, it's the same. But yeah, if you look at her chart, pretty much, if you look at that, February 12th was the peak. And that was, in many cases, the same thing happened with the microcap. So she peaked at 159, and so now we're, what is it, roughly $90. I don't know. The math is what? It's a 30% drop. No, is it 30% roughly? I don't know. So okay. So I look at it this way. The thing ARC bottomed at 33. It hit, was it 160, let's call it. So $130. A 50% retracement, which is perfectly normal in this type of space, 50% retracement of 130 is $65. So that should have taken us to about 95. Yeah, so we're pretty much. I think the bottom is actually getting pretty close. If you look, the MACD line is getting. I think things might be actually a little bit oversold. Again, it's below the moving average, and we've talked about this before. I've mentioned this stock a bunch of times. I think we're going to see a bottom. I mean, I think this thing is actually in the process of bottoming out. You can kind of see what's going on here. There's been a lot of volume, kind of this whipsaw action. And I think things are going to bottom out. Things always look the worst, right? It's always darkest before dawn. And also, look, it's just at market tops. Things always look the best right before it's over. I think as Warren Buffett, the Wizard of Omaha, whatever they call it, as Warren Buffett has said, the tops of bull markets are just like sex. It always feels the best right before it's over. So, and at the bottoms of the markets, people, there's that capitulation. I think we're getting pretty close there. I think we might see a flush in the next week or so. So we might see some more volatility. I really like if you look at this chart, okay, it looks like it's going low or whatever. I really have a feeling that, contrary to what it kind of looks like, I think we're building a bottom here. Oh, the internet's frozen. Yeah, so I think we're definitely building a bottom in the disruptive innovation space. So that, I think that'll be a positive trend for microcaps. When will we see the bottom? I think we're going to see the bottom for a lot of these things probably in early mid-January. I would say early mid-January. Could happen faster, but we're pretty close to the bottom. That's what I think. I mean, contrary, again, before I was saying, hey, the market looks like really bad, whatever. I actually think we're getting close to the bottom here. Yeah. Let's even take a look at, okay, so let's take a look at Tesla. I've given you kind of my opinion, bullish, bearish on Tesla. On the upside and the downside, I think I've actually have a pretty good track record with this stock. Again, we're below the moving average. It looks, this was kind of like your sell signal. It might go a little bit low, but I actually think, I know it sounds crazy, I think Tesla is going to kind of bottom out here in the next few days, maybe the 900 range. Once everybody panics, there might be a flush, maybe here somewhere. But, I think this thing is actually going to keep going. maybe let's say 820 even. It could drop another $100. Very possible. Again, I don't care about Tesla. I hate the company, everything about it. Um, not saying the guy's not a genius and everything, whatever. I'm not a fan of Tesla, but I think it's again, just like Bitcoin, it's just I think it's a good bellwether, a good trading vehicle for people who want to trade this thing. I think ultimately this thing is going to bottom out here, maybe in the 850 range, and I think we're going to see new highs by April, May of 2022. Let's take a look at Bitcoin. Bitcoin, another bellwether for speculation. Let's see what is going on here. So Bitcoin again, I talked about this thing, crashing, going much lower. I'm having actually kind of second thought. I think we're building a bot. Not, I don't know if this is permanent, but I think we're building a bottom here. Maybe it could be temporary. Which the bottom is probably going to be right kind of in this range, 42,000 range, very likely to happen. So it's this week, some interesting things are going to happen. Now, I don't, these charts there's no really clear signal. It's not like, hey, like sometimes you have a really clear signal, like, hey, everything looks perfect, like this is 90% odds. These things right here were kind of like, you're kind of fumbling in the dark a little bit. So we're gonna see what happens in the next couple of days, and that's what's going to decide. Let's see. Okay, let's talk about. Okay, so we got Tesla, ARK. We talked about. Okay, so let's talk about the major trend. And by the way, I'm going to open up the link. I'm going to give you a link if anybody wants to join. Hop on the video. In a few minutes, I'm going to be putting out the link below. Just make sure you're set up and whatever. Of course, we're only going to be talking about Wall Street Report or stocks. Like, don't tell me about some fugazi penny stock. Like, this is not a promotional thing here. Let's see, or I should say, it's not promotional thing for other stocks. Okay. So. Interesting. AMC. Okay, let's take a look. I've talked about AMC again. Like again, AMC. I think ultimately, this is again this and what's the other one? This is actually looking good. This chart. I haven't looked at this chart in a couple of days. You know what? I hate to say this. This chart looks like it could run. You have kind of a key reversal happening here. The MACD line's about to cross over. This is the one-day chart. Let's take a look at the 1-hour chart. Inconclusive. Looks like it's losing a little bit of momentum. But this daily chart, I got to say, actually, okay, what I don't like about it is, it's a little bit on the back foot right now. I mean, it's lost the momentum. Like, really, you'd want to see this kind of bottoming happening a little bit higher. It's way below this moving average. So it's really kind of like fighting an uphill battle. But I don't know. You're gonna have a lot of resistance here at this moving average range, this $36 range. It's kind of speculative, but if it breaks out, you could have a big run. Here's the thing with this AMC. I mean, this company, I think, ultimately it will be bankrupt. There is really nothing. Things have really changed. I mean, you got to kind of get with a program. I don't think anybody really wants to go to movie theaters anymore. It's just, people, you can watch movies at home, streaming. It's just the movie. Things change. I think the society is shifting, and the Hollywood studios are kind of more interested in streaming. It's something they can control better. The movie experience, I think it's really going to go away. I know they're trying to do whatever, but it's just, hey, you got to kind of go with the flow. It's like, the horse and buggy gave way to the car, and now the car, as much as you might like, you know driving that muscle car, that Lamborghini or what have you, with that loud engine, it's going to be electric. Everything is going to be electric, whether you like it or not. In a couple of years, it's just going to switch over. So ultimately, I think AMC will go down in flames. I would not want to own this stock. I mean, if you want to, as a trading thing, I get it. But yeah, let me take a look at Lucid actually. It's interesting. So Lucid, supposedly, actually, Lucid is. Let me see, Lucid. Again, this is this chart. This hey, this thing could pop here. You're breaking above the moving average. It's not like a great looking chart, but I don't know. It's the trend is up. I mean, this thing actually could have a pop here. I would not want to be short this stock. Absolutely not. Um, yeah, this thing is a little bit, the 1 hour, a little bit inconclusive, but it's not a stock I'd want to be short. Um, yeah, could go either. I'm leaning more towards whatever, but hey, uh, so that's kind of the thing. So I think both of these, you know what? I think these could pop. These things, both of these stocks could pop. I think that with AMC, hey, it's like Blockbuster, man. I mean, things change. I mean, theaters. Okay, they used to have these. I gave this example before. The adult movie theaters. Does anybody remember the adult movie theaters? The X-rated. They used to have those theaters, right? Times Square in New York was filled with those. And I remember seeing those theaters. They were like all over in New York, and I'm trying to think where else. Uh, you don't see them in you don't see them in Manhattan anymore. There's no like X-rated theaters. I think maybe they changed the laws or what have you, but the real and I think everybody remembers Pee Wee Herman, the infamous episode with Pee Wee Herman in the theater. Now, if I think the reason why those things really went away is, again, you had the generational change. I mean, people, they wanted to watch those films at home for whatever reason instead of going in public, go sitting in a room full of a bunch of other perverts, in the afternoon, with like a dirty raincoat. So that it completely changed, right? The whole business just went away. Everything went to yeah. There you go, drive-ins. The whole thing, yeah, drive-ins. I mean, yeah, there are still drive-ins. Some people are into it. I mean, I think even young people are into it, but it's not what it was. It's like how many drive-ins are left now? 1% maybe. So yeah, I think theaters are really the movie theater is going to go away, and I really don't understand how people are so crazy with the stock. These, this what is it, this thing, what do they call themselves, apes or whatever? They really believe that they're fighting this battle against shorts, and it's like it's a very personal thing. It's this weird thing. The market is not personal. Nobody really cares about your opinions. I mean, it's just about making money. And the short sellers, there's like some weird psychological thing. The market, the stock market, any market is not the place to play out your psychological problems. It's not about being right. It's about making money. So let's get back to the program. ESC Organic Garage. Yeah. Listen, these stocks, we're going to go into the charts right now, but yeah, sometimes they have to build a base, which takes a while to kind of build that base, and then they break out. Very similar. We talked about this. You've seen this movie, no pun intended, back to the AMC thing, but you've seen this movie with Peak FinTech, PKK, with how many other stocks? I'm just using the most recent example was Peak. And I kept saying, hey, it's going to break out. It's going to break. It finally broke, but it was in this range for 5 months, 6 months. So, yeah, I think we're going to see this thing happening with a couple of these stocks. Let's talk about organic garage. Let's talk about organic garage. Organic garage. I've been talking about this. This is a lot about this stock, and we've been really, we had the CEO on a bunch of times. This company's been getting a lot of attention on our platform. Um, One of the reasons is very simple. They have great news flow. Our whole premise with the next super stock program, which is finding these stocks that become 10 baggers, 100 baggers. The formula is very, very simple. Okay, this is why we've had such a high percentage of massive winners. If you look, we've probably introduced 20. I don't know if anybody's keeping count. It might have been 25 companies in the last 18 months, and of those 25, like 9 of them became 10x to 50x, and almost all of them did have some sort of pop, at least 50%. A bunch of them became doubles, triples, 5Xs, like even Cloud MD. If anybody remembers Cloud MD, Skylight, what else? What's the other one? Trip, Red Light Holland, a bunch of stocks, right? A bunch of stocks, they went up, 3x or 4x, what have you, and then they kind of fizzled out for multiple reasons. But the big thing that these stocks need is 3 things. Big market opportunity. Again, you got a massive multi-billion-dollar market opportunity. The company's got to be at a key inflection point. Okay, so what that means is when they show up on our platform, that's the turning point. Because companies take sometimes years to develop, and they're whatever building, and finally they hit that inflection point, the revenues start going, or the revenue starts scaling dramatically, and there's got to be multiple catalysts. Organic Garage is, they're hitting all 3 things, especially in terms of the inflection point and catalysts. Why are they on our program all the time? Because they got the news flow, and the premise of next super stock is the idea is, hey, how do you know the company's at the inflection point? Well, you know it because then all of a sudden you're going to start seeing massive news flow developments, business developments happening right after they debut on our program. Organic Garage, you're seeing exactly that. So they debuted, what is it? I think first week of October, I think it was, or November. Time flies. I think it was October, right? And the stock was 30 cents, or it was 30 cents when they announced it, right? So it doubled. It went to, what is it, 60 cents. Excuse me, more. It went to 70 cents. And they've had news. Here is they got the plant-based brands that they're rolling out. They've delivered on everything. Yes, RHT, exactly the same thing with I'll get back into RHT. RHT and Organic Garage, same exact thing. There you go. I mean, look, it's very important. I think if you look back, the stocks that perform well, it's those companies where the CEO comes on our program and he says, "Hey, here's what we're going to do. This is our game plan. Here is the vision. Here is the goal for the next 12 months." And then you see them actually delivering. You see the news flow starting to happen. Every week, 2 weeks, you see a press release that say, "Hey, we did this. We hit this milestone. We hit that milestone. Boom, 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 boom." It's a constant progress. And that's the dream scenario. You're seeing that with Organic Garage. You're seeing that with RHT. And I think both of these stocks are going to do very, very well. They're delivering. I mean, and if you notice, the stocks that have kind of, we've had a couple of duds, stocks that debuted and then after like a week, there's no news. It's like crickets. Where's the news? Where's the news flow? So the point is, and look, I know that you guys would be pissed off. I'd be pissed off. You see, if we're saying this is going to be the next super stock, is going to be the next great thing, and then, you don't hear anything from the company for weeks. Like, what's that all about? And people are, they feel like they got scammed or something. Not scammed, but well, they do feel. I mean, they feel, because the premise of the program is things taking off, news flow, developments, boom, boom, boom. That's the whole idea. Otherwise, it could be just a regular stock. There's nothing wrong with being just a regular business. You have, a news release every, once a month. You did this, slow growth, whatever. That's not what the next super stock thing is. So, anyway, Organic Garage, they've been delivering the news full of plant-based foods. If you missed the last live stream, two very critical things at the end, the last 10 minutes that were discussed. And that is, the CEO said, it's Matt, he said, hey, one of the big things, one of the things that I was interested in when we took them on was, look, I think that they have this great business with those specialty retail stores, these organic garage stores. It's a concept that could be scaled globally, right? This could be the next Whole Foods, Trader Joe's, what have you, Home Depot, any type of retail business which scales with thousands of stores. I mean, they got a great concept, easily scalable, right? They got the concept really dialed in. So they got 4 stores, and one of the criticisms of the company has been, oh, it's not growing. It's they only have 4 stores and that's it. No, well, the point is that, sometimes companies, if you look, okay, I would suggest, so there's if you look at any great business, there's a book called From Good to Great. It was a great business book, Good to Great, I think it's called. Yeah. And, the guy describes the process for a great company. They did, massive research, all the companies that became massive winners. They kind of, the way they developed, first they were growing, then they kind of dialed the concept in. And sometimes it took them a while to get their business concept dialed in, which depended on, different metrics, et cetera, et cetera. But once it was dialed in, then all of a sudden, boom, they started exploding. So it was things that were very quiet on the surface, and people maybe gave up on those companies, and then boom, they completely went ballistic. You're starting to see the same thing that happened with Organic Garage. If you watch live streams from last week, watch the video, which is on our Wall Street Reporter 1843 channel. Matt said, hey, no, they put out a press release that they engaged Savills, which is the big commercial real estate firm, to find them, suitable potential space for stores. They said that the market just in Toronto, I mean, again, the idea is they're gonna first expand in Toronto, then they're gonna go into other areas, then maybe in the U.S., etc. It's a process, right? But again, in Toronto alone, they said they got 25 potential sites. And again, Toronto, I mean, I don't know, I didn't realize Toronto was that. I mean, apparently there's enough people there, but it's just one little market. Imagine they do this in, like, I don't know, Phoenix, Arizona, Southern California, I don't know, whatever. There's all over the U.S., even Vancouver, other areas. So now the big news is this. They got the game plan. They're looking at 25 potential sites just in Toronto. But if you read between the lines of what was said in last week's interview, Matt said, we're going to announce, we're going to sign these deals, and we're going to roll out 4 to 6 stores simultaneously. In other words, they're going to get the leases signed, and those stores are going to go into construction, whatever it is, and boom, all of a sudden these guys can double their revenues. Could be the next 6 months, could be this year. Their retail business could double, and that's a game changer. Toronto is okay. So they're doing 30 million right now with the 4 stores, and if they do 10 stores, they open up 6 stores, they'll be doing what, 60, 75 million. So here's the key. I believe the market, if they hit that level, that velocity, that type of high speed growth in this year, the market will really pay a premium. It'll pay 5 times revenues maybe. So you could have a 300 million market cap on that because, again, the market is forward looking because investors will say, hey, wow, these guys just doubled their revenues. They really are scaling. They really are ready to scale because that was one of the big unknowns. Can they scale? Will they scale? But once they see this thing happening, the cat is out of the bag. And, the market's going to go crazy. People are going to start extrapolating this, 70 million revenues is to be 150 the next year, 300 million. So that's why you can get a 4x, 5x revenue multiple, I believe. You know what? If you want to have questions, I'm going to post a link. If you want to ask questions live on video, I'm going to post the link for anybody who wants to join in a few minutes. So anyway, bottom line is, if the market will pay 5 times, 4 times, 5 times that 60 million, you're talking about $300 million valuation. Do the math. 50 million shares out. That's $6 a share. That's one way for them to be a 10-bagger. Path number 2, they got the plant-based foods, and Matt explained exactly. They're going to have 10 SKUs. It's not a lot even. The threshold for them to be that 10 bag is so low. The company now has a $25 million market cap. It's like they're giving away the business is like basically free. It's like it's ridiculous, right? So they get the 10 SKUs of plant-based, future of cheese, future of butter, all those cheeses and butters, and they get that into 2,000 stores in Canada, in the U.S. It's not difficult to do. Again, by contrast, we talked about that Oatly is in 65,000 stores, plus 65,000, I think, foods. So huge. So it's not hard because, again, some of the big chains have 500 stores, 600 stores, etc. There's a bunch of them. So it's actually very feasible for them to be into 2,000 stores with 10 products. And I think he did the math, etc. Look, all they need to do is do like 10 million in revenues in the plant-based stuff. That's nothing. 10 million would be with like 500 stores. If they just did Canada, they could do 10 million, right? So if they do 10 million, for the plant-based, the market is paying a premium now. You look at all these plant food stocks, they're going crazy, high multiples. You can have a 10x there, 20x. So let's say they do 25 million in revenues, the market will pay 10x. That's 250. So 250, the other 250, it's $500 million market cap. Divide by 50 million shares, that's $10 plus a share. Now, everybody's saying, well, aren't they going to have to issue more shares? Is there going to be dilution? Well, yeah, there probably will be some share issuance. Not a lot. And if you look at the way that they've been operating, they've been very, very tight on issuing new shares. Look, they announced this, the prospectus out. So potentially they're announcing that, they will be ready to raise money anytime in the next 18 months. They get the prospectus that's open. They haven't done it. The news came out at 30 cents. Everybody thought that these guys were going to raise money at 30, 35 cents. So you had a lot of short sellers came in. They figured, hey, we're going to short the stock, cover through the private placement, keep the warrant, the usual game, and capture a quick buck. It hasn't happened. It's not going to happen. I don't think this is going to happen any price below $1. And if they did raise, it would be very little. So again, for them to open 6 stores, it's not a big capex. It's not a big outlay because a lot of that stuff is, you got financing sources for the equipment, the leases. That's you get 3 months of rent. It's actually minimal capital outlay. It might only cost them. If they're really aggressive, they could do it for maybe 300 grand a store. I think I think we talked about numbers like that. So they only need to have, let's call it $2 million to open 6 stores. Again, don't hold me to it. It could be plus minus a million, whatever it is. They have, I think, 3 million cash on hand right now. They got warrants that were exercised. And look, I think what probably is going to happen is once the stock is over $1, maybe $1.20, they might raise a couple $1 million. They might do a small raise, 5 million maybe. I'm speculating. I'm not speaking for the company. Everything we talk about on this chart chat, this penny stock billionaire program, it's all unofficial information. It's not company information. It's just my personal opinion, etc. So yeah, they might do a raise of $5 million at, let's say, $1.20 or so. It's only 4 million shares. There's not going to be any big dilution. People are like delusional. And by the way, we've seen stocks move in a lot of shares. Look at CBDT, one of our biggest winners. CBDT went from 5 cents to $2.50, and I think they have 400 million shares out. It's crazy. Yeah, no dilution. It's not, well, okay. If a company is raising money, where it's accretive, it's at a fair value, that's not dilution. Reverse splits, I completely agree with you on. Reverse splits are garbage. Share buybacks, I'm philosophically opposed to share buybacks. I don't think a company should be doing that. But by the way, these microcaps, nobody does share buybacks. I mean, the only companies you see doing share buybacks in the microcap space, it's usually some sort of scam, or they announce they're going to do a share buyback. It's all complete bullshit. It only works in the big cap world. Usually when they do the buybacks, it's always at the peak of the market. It's usually very bad timing. So anyway, Organic Garage, and we have a video up on YouTube where the case is laid out why this could be a $5, $10 stock. Okay, sorry I got sidetracked. I'm very enthusiastic about the stock. Okay, back to the chart. Forget about the fundamentals. The chart. I think the chart's looking good. Now, we are below the moving average. We're below the 50-day moving average. Again, like some of the other charts we looked at before, a lot of times there is kind of a fake out in the market for a couple of days, and then it goes back above. So I wouldn't read too much into it. I would say that right now the stock looks like it's gaining some traction here, like it's making a comeback. Look, you had a big run from 30 cents to 70 cents. Perfectly normal for the stock to pull back to that 45, 40 cent range. Completely normal and very healthy. We've consolidated now for how long? Okay, so the run up took 6 weeks. Okay, it was a run up for 6 weeks, and you've had a consolidation now for about 6 weeks now. I think there's a symmetry there. I think we've bottomed out. So Organic Garage, I believe, is ready to go. Now, if you look at the 1 hour chart, the 1 hour chart's looking good. Now, I would have liked to see a little more action here on Friday, but again, the market right now, the volumes have been very thin for the last few weeks. Volumes are thin. Stocks are under pressure. You really do have tax law selling. You got a lot of things happening. So Organic Garage has actually held on very well, considering what's been going on in the markets. Again, yet overall markets have been crashing. All you got to do is look at the Cathie Wood ETF. Look what's going on with it. Then you got tax law selling season last month. So yeah, perfectly normal. Anyway, I think Organic Garage has bottomed out. You can kind of see it right here. And we should be breaking out. You're going to want to watch this 48 range. If the stock breaks above 50 cents, I should say when it breaks, not if. That's going to be a very strong buy signal. And when it breaks out, I think the next stop after this is going to be $1 plus. The next stop on Organic Garage, in my opinion, is going to be $1 plus. Okay, enough on Organic Garage. Let's jump into the next one, Esc Entertainment. Again, I think this is a stock that could be $10 also. I talked about it multiple times. Why? They're doing now 60 million, 50, 55, 60 million run rate revenues in esports. How much were they doing when they came on our platform last December? Under $1 million, barely $1 million. So you had a 6DX, 6,000% increase. This CEO has been doing everything he's promised. He's been delivering. Now, of course, he had a massive run-up. This stock became a 10X. We introduced it at 36 cents. It went to $4.50 in 4 months. It's crazy, right? So you had the consolidation for the last 6 months, basically. I think the stock has been getting some short selling happening here because I think there are people expecting them to do a raise, and there's going to be a raise. I don't think they're raising any money here. I think they're done for now. So that's probably what's been putting this under pressure. Now, again, this is another one. It's below the moving average. So in theory, this is bearish, right? You do have a lot of support in this $1 range. I think we're going to build a base kind of here in this $1.15, $1.20 range Canadian. It's going to take a little while. The stock needs to regain its footing right over here. And in January, in the new year, it is going to break out. So, yeah, exactly. You know what? Okay, here's what I'm going to do. I'm going to do the thing now. I'm going to do okay, so if anybody wants to join the live stream and ask your question, my throat is parched. I don't know, I'm getting like dry. So I'd rather have you talk about these stocks, get your opinion. Hang on, let me see this. Okay, I'm going to post the link right now. Let's see. This is brand new. We haven't done this before. We have not done this. This is a new thing. Okay, so the link, that is the link. Okay, so if anybody wants to join, there's your link. Don't be shy. All right. Pumping OG pretty hard. Watch Monday will drop. I don't think so. Raya. We're going to talk about Raya. TBP. ESC. Yeah, this guy is absolutely. Look, the guy went from $1 million in revenues to 55, 60 million run rate right now. Who else has done that? This is a stock that should be trading at 600 million market cap right now. So that's that would be what, $6 a share. And he said he's going to take it at 250. So this could be a multi-billion, 2 billion market cap, easy. Visby, yes. Yeah. Speaking of companies that did not deliver, bad financings, and why people are afraid of dilution, etc. Oof. Case in point, TBP. Case in point. I'll pull this up right now. Just whatever. This has not been one of our big winners by any stretch. But again, look, this is a biotech stock, health tech space. It's a binary type of deal usually, and if things work out, it could be a $10 stock. If they don't, it goes to zero, right? That's how it works in this biotech world. So we introduced the stock, I think it was 14 cents. And sure enough, it went to 50 cents. um, we were expecting some news flow, clinical results, et cetera, et cetera. They delivered some of it, not as fast as that people wanted. I think what's killed the stock, frankly, is some of the capital raises. Like, again, they did a capital raise here. I don't think that was, again, and it's not me saying it. You've heard Sean Black say it. Like, they really shouldn't have done it. I mean, like, the stock was ready to break out. I mean, it was a massive short squeeze happening. They could have done a raise at 75 cents, a dollar. But they did the raise. The stock got shorted, and then they stopped they kind of stopped putting out news for a while. And now again, we our deal with them was up at the end of August, really. So we haven't done anything with them since September. I don't have any contact. I don't know what's going on. Now I know they did a raise over here, like really cheap. I think 17 just recently. So, and yeah, that was dilution. That was really dilution. I mean, they could have done it. I mean, there's no market support in the stock, right? So why would you do a raise when there's no market support? It's not a good idea. So look, the with these stocks, they definitely are high risk. That's why we have this banner here. Not a recommendation to buy or sell securities. You could lose all your money. By the way, if you're looking to, we all talk about everybody wants to make a 10x, 50x, make 2,000%. But if you want to get those types of returns, you got to be prepared to take a hit. In the case of TBP, actually, it's not that bad. It's only down here. It's only down like a little bit. So from 15 cents, it's only down a penny and a half. So we introduced it at 15 cents, right? It's 15 cents. It went to 70 cents. So now it's down. Well, it's down 5% from it had a massive run up, but it's down from the peak. It's down, I don't know, 60% plus. Logic has been Logic. This has been very frustrating. Again, great story. I talked about this chart. We got to get the CEO back on shortly. I think it's been pretty much de-risked. I mean, look at this. It's like a double bottom. I mean, this is like a clear double bottom. I don't think it could be more clear. They're doing what, 40 million revenues? I think this thing is going to turn in January, and we could see a massive run up. When we first introduced it, it went from 350 to 14 bucks. And I mention that because it goes to show you that this is a stock that can move very, very quickly. I think it's going to do the same again. Ultimately, I mean, could it go to 20 bucks? It can. Okay. Hey, so what is anybody going to join? Is anybody going to join onto the live stream? It's very insulting. What are you guys, shy or something? Here is the link if anybody wants to join. Make my job easier. Okay. NTEF in the so yeah, I'm looking at the look at the Canadian, but yeah. Yeah, this is where it is. This is the U.S. price. Wow, look at this. A lot of selling on Friday. I mean, this could drop a little bit, to be honest. It could drop a little bit. And then when it bottoms out here, it's going to have a massive run. Again, there's really no reason for this thing to be trading below $2 right now. Excuse me. Yes. ESE 2022, I believe, is the year. Correct. Okay, let me. Excuse me, my throat is very dry here. Let me catch up to a couple more stocks, which I think are going to move this week. Relic RHT also has been under pressure here this week. Everything's been really. You can kind of see what's happening, but but it's making higher highs. This is a stock that wants to go up. The fundamentals of the company are phenomenal. We're going to have Lisa on, I think, this week. I'll talk about why in a second. Okay, hang on a second. I got to get some water here. I'll be right. Okay, we're back. Relic Health RHT. Here is a company, perfect example of a super stock, massive market opportunity, inflection point, catalysts, and the company's been delivering ever since Lisa came on our program in February. She's done everything promised. The contract started, onboarding, revenues, everything has been working out. I'm surprised the stock is not $250, $3 right now. Ultimately, I'm looking for $5 by May of this year. But as you can see, it's trending up. It's actually one of the best performing stocks right now, one of the strongest. Here is the US chart. Again, it's below the moving average, so I won't deny that. But again, I talked about this before. It's been making higher highs consistently. And I think we're going to be breaking out of this range here. It's going to build a little bit of a base and then up. So again, the old high in the US was $2. I think we're going to take that out. So that's the equivalent of, I don't know, what is that, 250 Canadian, and then $5. Okay, I'll answer your question with Raya. So yeah, I don't know. This one's kind of, this has not been the best performer, to say the least. We got to get the CEO back on, get an update. I don't know. Is it just, this is a little funky stock here. So, we introduced this right around here, had a pop, and then they kind of faded out. Like, there wasn't any news for a while. It's like we were expecting some contracts, some deals. And I don't know. It hasn't materialized. I mean, you're starting to see some things now. So it's one of these things I think is going to bottom out over here. So I think we'll probably have seen the bottom in Raya. Let's get the company back on the program this week, find out, get an update. about what's going on. Um, that's the deal with Raya. Let's see what else we got going on here. Okay. So Relic, I think, is looking good. ESE, Organic Garage, Liquid Avatar. Here's the next one. Very interesting stock. So this one we introduced last year, as you all remember, at right over here. 13 cents, 14 cents, or whatever. I mean, people bought the stock, right? This is like when people were going crazy because every new stock, every stock we introduced, it would just pop. It would double overnight, same day. So yeah, the thing doubled. People bought it. They didn't even know what the company did. And yeah, I don't think they understood it. And now, after 6 months or a year, I should say, it's actually starting to become something quite interesting. So they are in the metaverse NFT space. I think one of the few pure play penny stocks, maybe the only penny stock that's a pure play on the metaverse NFT space. And here's the key thing: they're generating revenues in this business. I think they said they did 700 grand in business in this digital land sales between October of this year and early December. So that's a 2 month period. It's pretty substantial. And it's like from nowhere, out of nowhere. So if they keep going at that trajectory, that means that they're not going to do 700 grand the next quarter. They might do a couple $1,000,000, right? I mean, you're seeing some crazy things happening in that space. This thing can go crazy. Yeah. Let's see here. Yeah, so Liquid Avatar, actually, this chart is actually looking, again, it's below the moving average right now, like a lot of these stocks. But again, I have a feeling we're going to see a reversal here. Very similar to the charts I showed you earlier with ARK and Tesla. Kind of the same thing. They kind of look, in theory, they're below the moving average. They kind of look like they should be going lower, but it doesn't quite want to go lower. So I think we're going to see a big move over there. And, if they keep delivering in this metaverse space, this could be a $1, $2 stock in a very, very short order. Talking about, no, I'm talking about Liquid Avatar. Liquid Avatar is the metaverse deal. And again, the great thing about this is, they were doing metaverse from last year. They were doing this. The market has caught up to what they were doing. Okay, let's see. We got to get we got to get Calvin Ting. We got to get Calvin on. Shit, it's 9. What is it? 6:30 in Vancouver. Let me see. I'm gonna get him on the next live program. But yeah, you guys, who wants to be you can be the next Calvin Ting here. I mean, Dwight. I mean, just click the button and get on your webcam. Oh, you know what you could do also if you're shy? What you could do is you can go on the thing, but without the video showing. So in other words, there's an option where you could do there is an option where you can not have video. You can just have audio. So when you log in, so you could do that. Let me see, how do you do that here? Let me just try it myself. Okay, yeah. So as you can see, this is what you could do. You can have sound but no camera in case you are shy. Okay. Here we go. Dwight, come on, man. Log in. Kevin. Geez, this is the two dogs. Vinergy. Okay, so these are two stocks. What is it? GBLC and Vinergy Bitcoin stocks, which we introduced last March, I think it was, right? Or thereabouts. And it was, anybody, I mean, they were complete kind of disasters. One of them was like, I don't know what GBLC was like. I mean, like, I don't know what the hell it was like. I don't know. I don't have no comment. I was told it was going to be one thing, then the story, the whole thing is just crazy. And then the Vinergy, the guy came out in one time. We haven't heard any news since. I think they got a new CEO now. And like I haven't heard anything from Vinergy. So and their program expired a long time ago. Like that's embarrassing. So we've had a couple of these. Look, I mean, this is part of, again, high risk, high reward, high risk. When you have companies in the microcap space, sometimes you're going to have these, like, even though everything makes sense, you think is good, it doesn't work that way. And sometimes when you have something which, like, you really don't expect, like it's like, the things that you least expect turn out to be 10 baggers. There's really, in this microcap world, you don't get like perfect, like, oh, this thing is a blue chip, everything is perfect. There's always something, there's always some hair on it, as they say. There's always something a little funky. Yes. Well, I would not read too much into the drop. I wouldn't read too much into that. You got to see what happens in the next few weeks. The stock was halted. They were going to do this merger with this Indian betting company, which is the way it works in Canada. You got to hold the stock, get the shareholder vote, etc. So my take on bets is there are people trying to buy the shares right now. Okay, so if you notice what happened on Friday, the stock opened up and it went straight up, basically. So you had panic selling, and that's it. It went straight up. So I actually think bets, I mean, that's very bullish, actually. I think bets will do very well. AIML, I think we're going to have Tim back on in January. Delic, we're not working with Delic. I don't know, maybe they might come back at some point. I think that actually their business is actually doing pretty well with the psychedelic clinics. It would be interesting if they got 10 clinics going and they actually have the revenues. That would be good. Visby, God, how could I forget Visby? Again, one of our big winners here. So Visby, here's the 1 hour chart. Oh, why is it not working? Okay, there we go. Visby, below the moving average here. So, this is, when it's above, you buy, when it's below, you sell. I think we're bottoming out here shortly. It's probably going to happen in this kind of $1.10 range in the next week. I think Visby is going to bottom out in sometime in the next 2 weeks, and then January is going to be a big move. So perfectly normal. It's a stock we introduced last year at 17 cents. went from 17 to $2, right? But again, look what happened. It went from 17 cents to this almost $1.90 range, and it was consolidating over here. And I don't know if you guys remember, I kept saying, hey, it's going to be breaking out of this range. It's going to be breaking out. It's going to be breaking out. Because it kept, you kept seeing these kind of like, chart patterns, these like upside reversals. And it didn't. Then it finally broke down when they did a raise. They did a raise over there. So it kind of was under pressure for multiple months. And then finally did break out in, how long did it take? It took October. It took 6 months longer than I expected. Sorry. It went to $2. I think we're going to see $5 in the stock. Yeah, listen, just like I told you that it would break out, make new highs, go to $2 way back then, I'm telling you right now, this is going to be a $4 or $5 stock, probably in the next 6 months. For the next week or so, I think it's going to be I think it's going to be a little bit under pressure. It's got to build a base. It's got to build a base over here, digest some of the gains. I mean, look, this is actually very normal. Look at this. The stock between August and November, it went up 4x. Let's say 50 cents. Let's just call it 50 cents. It went from 50 cents to $2. That's a 4 times. You don't think a stock is going to digest that, consolidate for a little while? So from 50 to $2 is $1.50. It's at $1. It's a 33% retracement. That is very good. Very, very good. It's going to be huge. Huge, huge, huge. I am hoping so. I'm trying to get him on maybe this week. Doc, no, CloudMD. We haven't worked with CloudMD since a year, 12 months. Over 12 months. I think the last time, I think we had Isam back on. He was on this time last year, and then they kind of, fell off the radar. Well, the program kind of, our deal that was up at the end of December, and I think they decided that they were going to focus on the institutional market, and I don't know, they kind of, I think that was a big mistake. They had a big retail following. I mean, look, we have people, if you look at this thing with AMC, somebody was mentioning AMC earlier. AMC, the smartest thing that this guy has done, the CEO of AMC, is, he's engaging with retail. I mean, you rarely see a CEO as engaging with retail. And look, you got complete idiots, a lot of idiots in that stock. They're giving most of the suggestions. What is just completely insane. There's actually an article in the Wall Street Journal the other day that basically this guy is under control of the apes. The apes are in charge. The apes are in charge of AMC right now. The patients are running the lunatic asylum. But listen, you got to give the guy credit that he engages with retail. He understands the value of retail. It's the retail buying that took AMC from like bankruptcy to raise hundreds of millions of dollars. I mean, listen, that's the right thing to be doing. Yeah, I don't want to even look at the futures. No, the market, the overall, the Dow, Nasdaq, everything is kind of looking shaky. I don't think it's going to be as bad as it looks like. It's like too easy. It's like too perfect. Like too many people are bearish right now. That's why I don't like it. I only believe in being bearish when everybody's like, super bullish. Okay, you're talking about what do you call it? They have 15 clients. I don't know what they have. I've lost track of it. But if they have and they have some numbers, it could be very good. That could be the story. I don't know what's going on with those guys. Okay. Do we cover everything? I'm really shocked that nobody wanted to join the program. It's like, what is going on? We got a couple hundred people between the two different channels and whatever. And nobody wants to join. Harris, here's the link. You can join the program. I agree. Oh yeah. So here's my investment thesis. I think we're going to see, like right now, things look under pressure. I mean, I'm not going to tell you things look like a rose garden with the markets. I think we're going to bottom out, like I said earlier, early January, maybe mid-January. Worst case, so I got two situations. I got two alternative situations. One is we have a minor, the correction kind of ends at the end of December, after all the tax loss selling. So by January, things pick up. That's scenario number one, which I think is a 70% probability. Scenario number two, which I think is a 30% probability, is, you know what? The markets really crack here, which is, it's possible. If you look at, you look at you look at NASDAQ. It's possible. It's below the moving average. I mean, a lot of stocks right now are below that 50-day moving average. A lot of our stocks are below, and NASDAQ is below, right? So could NASDAQ drop from, what is it? It was 16 and change. Where could it drop? Okay, so look at it this way. You had to move from 6,000 to 16,000. 10,000 points. Let's say you take a 30% correction. So 13,000. I think we could see maybe even lower, maybe 12 and change right over here. Somewhere in this 12.5, 12 range. Could it drop to there? It's possible. So it could happen that we may see a downdraft into that range towards the end of January, and you have capitulation, and that's it. You got the capitulation, and the market bottoms out. Nah, I think that's already baked in. The variant's already baked in. Oh, we got somebody coming on. I don't know who this guy is. Chris, you're live on the air. Chris. Oh, he's mute. Chris, your mic is mute. All right. Technology. All right. Chris. Maybe he's not on. All right. He's not. He's gone. I don't know. Yo, Chris. Yeah, NASDAQ. Look, the NASDAQ, for sure. There's got to be a correction, right? I mean, why not? Why not? But yeah, here's the thing. Look, January, the theory is January is always like the bellwether month. How goes January goes the rest of the year, right? So it's very possible that we see correction into January, and at the end of January turns around, which would be very bullish. I don't know. We'll see what happens. Yeah, no, look, yeah, you got a lot of tech stocks dropping. I mean, I showed you the ARC. Chris, okay, so come back on. Chris, use that link again and turn your mic on. Let's see if Chris comes back on. Let me just address a comment here from Kevin. Too many zombie stuff. Okay. Hold on a second. If you're talking about companies that are not on our, that are not clients of Wall Street Reporter, that we're not promoting, if you will, yeah, I agree with you. I don't know what these guys are doing. Look, the way I look at it is this, and this is the reality of the situation, right? Again, I don't want to sound, obviously I have an interest in this, but look, I think a company, the job of a CEO is to be maximizing the stock price. And if you could do it in a cost-effective way, why not do it? And if they're doing it and they're getting results, why would they stop doing it, right? It's like, it's really stupid. Because look, I mean, if you're paying, let's say, if you look at the value that we created for a lot of these companies, I'll use Red Light Holland as an example. The stock went from 15 cents to, what was it, 70 cents, I think it was. I don't know how much was 100 million value created plus. They raised $30 million as a result of the liquidity. How much did it cost them to do this? Very little. When they pay 100 grand or something? I mean, for the result. I mean, would you pay 100 grand to create $100 million in value? That's a pretty good trade-off, pretty good ROI. You know what? It's interesting. If there's multiple variants, more closures, it's an interesting. Okay, so here's scenario number 3. Here's scenario number 3, which you got to keep these things in mind, right? It could be that there's just multiple variants of the COVID thing or whatever, and look, you have governments for whatever reason that they like the sense of power and control it gives them to be shutting down economies, etc. You're seeing that definitely in a lot of these democratic states. In the U.S., by the way, I mean, there's, I just read something that in Africa, right? Africa, third world, I mean, it's a whole third world continent, right? They got COVID, right? And you would think everybody would be dropping like flies, right? No. You know why they're not? Because, this is interesting. This is the theory. Because there is a massive intake of these, what do you call it, anti-malaria medications, because they got malaria there, right? So everybody pops the malaria pills like we're popping aspirins here in Africa, right? And of course, now I don't want to mention the names of these anti-malaria pills because I don't want to get banned by YouTube. But we know the anti-malaria pills, which are the ones that apparently are very effective in combating COVID. I mean, this is the Joe Rogan stuff, right? Anyway, Africa, you would have assumed there would have been millions of people dead. No. Why, in India, the same thing there. You don't have you don't have millions of people dying in India. Why? Uh, there and horses also. So listen, carrots. Horses eat carrots also, right? Anyway, look, here's the reality. Yeah, so we it could be that this thing could drag on, and people might get just bummed out. You might have just negative sentiment. You got inflation, the supply chain. You got a lot. You actually do have a lot of things that could go wrong. But if you, here's the thing: if you look at kind of the economy in the U.S. right now, there's a labor shortage. I mean, if you want a job, shit, you get your choice of jobs. Well, wages are going up. I mean, there's fast food places that are paying people $20 an hour. You got, I mean, there's pent up demand for it. Try to buy a car. So you got a lot of pent up demand. And the question is, all of a sudden, let's say everything works out, then you may have a big supply overhang. So I don't know. The things can happen. Who knows? Look, I'm not here. I am not. I don't have a crystal ball. And the charts, I'm showing you the charts. As I said, sometimes things are really crystal clear. Like say, hey, it's just black and white. Right now, a lot of these things are kind of fuzzy because a lot of these charts, they kind of look like they're bearish, kind of bearish stuff. But there's been so many fake outs. Again, right now, I'm showing you this thing. NASDAQ is below the moving average, right? How many times has NASDAQ dipped below that moving average and then moved higher? So people got faked out. How many times? Look at this. Forget about that one instance over there, but 1, 2, 3, 4, 5, 6, 5 times. So NASDAQ has had 5 of these fake outs going below the moving average, consolidating, and then making a higher high. I mean, that's just so. And again, look, this is, we can only do the best with the data. What can I tell you? There you go. I agree with your thesis. There's 2 ways of looking at it. You could say that the bull market ended in 2020, which was the COVID crash, because that was a big, washout. So there is a theory, which we'll know, we're not going to know for years, but the theory is, okay, the new bull market started right then in March of 2020. I would say it's definitely a new bull market. It has a feeling of a new bull market because you have a whole new population of investors that have joined the bull market in the last 18 months since March of 2020. All the Robinhood traders, a lot of people, millennials, joined the market for the first time. So, bull markets climb a wall of worry. So there's 2 possibilities. One is that that was the new bull market began. Possibility 2 is what Kevin is saying, which could be is that, hey, things have listen, the valuations are really stretched. There's no question. However, the good news is this. A lot of the micro caps right now have been really beaten down. I mean, in the last year, if you look at the CSE exchange index chart, that thing has been a ski slope. It's down 50%. So I think a lot of the micro caps are near bottoms. Now, the bigger cap stocks, Definitely could drop. Um, Easily. Yeah, it's a weird situation. Things can kind of go either way. I mean, I'd love to be able to give opinion. Hey, this is the but right, like this is what's going to happen. But right now, things are kind of like really just kind of hanging in the balance. Um, March 2020, end of the well, that no, that could have been the end of the bull market that started in March of 2009, right? So March of 2009 was the bottom, and it's very possible that topped 2020, and March of 2020 was the bottom again. We don't know, right? You may not like it. I may not like it, but yeah, it could be very well the case. So, but uh, right now things are looking pretty good. Uh, yeah, used car prices. Yeah, you don't need to Google it. Everybody knows. I mean, everything like a used car, used cars are up 20%. But here's the question though. Used car prices are up, right? But the problem is there's so much demand, and they're not going to be able to catch up to making the new cars, right? Because they were offline for months, right? And then the other thing is this: apparently, the manufacturers now, from what I understand, in the U.S., there's always you go to a car dealer, there's 1,000 cars on the lot, so they had to put up money for inventory, all that. Now I think they're probably switching to more of like a order the car, like low inventories. It's very possible these used car prices are not going to drop automatically the 20%, in 6 months. But yeah, shit, who knows? Chip shortages, yeah, you got course of no. Look, you have massive market manipulation going on for sure. Stimulus money. You have. I mean, there's probably hundreds of billions of dollars in just fraudulent. I mean, those the PPP loans or whatever it is. I mean, like now you're just hearing stories about people who got loans for $10 million for like some fake business, whatever. Who's tracking these things, right? Yeah, the chip shortage is not an issue for Visby. So yeah, Visby is, I think, going to be in a very, very good situation. Okay, to recap, Organic Garage for tomorrow is actually out of the whole group of stocks. Organic Garage in a very good position to run tomorrow into this week. Keep an eye on that. Relic also. Actually, Relic could be. The others are kind of could go either way. We're going to see tomorrow what happens. So the market is definitely a little bit. Market is definitely going to be challenging for the next few weeks until we get into the new year. And top two, in my opinion, this is purely my opinion. OG, ESE, actually, OG, highest probability, I think. ESC, very high probability of being, triples, 5Xs in the next few months. Liquid Avatar, I think could easily double from here, plus plus. Visby, $4 by April. And Logic At some point, it's going to bottom out here, and it's going to be just silly. And that one could be a triple. Okay. Yeah, there might have been some short cover. It was some weird situation there. I think there was a short, and then maybe they've covered it. I don't know. Very possible. Okay. All right. Thank you for joining. Hopefully, next time somebody is actually going to join the live stream. Chris, we're counting on Chris to join next time with his mic working. All right. Thank you, everybody, for joining. We'll see